Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day. Good morning, everybody. Welcome to this Tuesday edition of Benzinga's Pre-Market Prep. Spencer Israel, Joel Elconin, and Dennis Dick with you this morning. What is on our radar? Well, I guess in hindsight, it seems obvious, but it would have taken a downgrade to pause the momentum in Beyond Meat, and that is what happened this morning with JP Morgan. So we'll talk about that. We'll talk about the CVS Aetna deal that closed last year, potentially seems like it could be in trouble. A judge indicated that last night, so we'll talk about that. They're hitting CVS down on that news this morning. Today is Tesla's shareholder meeting as well later in the evening, so we'll talk about that. Dennis sold some long-term positions last night, so we'll talk about that. And before I forget, 9 days and counting now to the Benzinga Trading Summit, June 20th, New York City, bzprofit.com, promo code PMP50. On that note, Joel, what is the word here overnight?
Oh, major green on the screen, up 13.5 handles at 29.0275. Oh, that pre-market low last night, 86.25. Not only was that Friday's high that matched Monday's interday low, and we took off. 0575, that was yesterday's high. That's our target on the upside. Things really open up after that. Crude up 54 cents here at 53.80. Gold in the red here by 490 at 1324.40. Couldn't clear that 1350 level. Silver well under 15, hanging out unchanged here at 1464. Bitcoin struggling with 8,000, down $227.50 at 77.85. Well, we'll get it over here. Let's bring in the birthday boy.
What are you talking about?
Yeah, happy birthday,
Is it my birthday?
43 puts are worthless.
Oh,
right?
Is it my birthday? Did I forget my own birthday?
You want to take the day off?
Aren't you supposed to? I'm working on my birthday.
It's a little late for that, but happy birthday, Dennis.
It's funny, actually. My mom texted me last night, and she's like 14 hours until this was like at 10 o'clock at night. So she's like, the time I was born. And she's texted me that, and I was like, question mark. I sent back. I know what she was talking about. And I was like, oh, it's my birthday tomorrow. I didn't even realize it was my birthday tomorrow. So my mom reminded me. Otherwise, I actually might have not even realized it was my birthday today. It's ridiculous.
I'm buying to 44 calls, man. I am. I'm buying to 44.
You think I'm going to make it to 44?
Yeah.
364 days to go.
And I'm not going to sell the 60s or anything against it. I'm just going to buy the 44s.
Not going to do a spread?
No.
Just in case?
Nope, not at all. But anyway, happy birthday.
Thank you, chat. Thank you, Yvonne. Yes, I feel older already. My back is hurting here this morning. I'm sleepier than normal. So 43 feels worse than 42.
All right, so let's talk about, we got to start with Beyond Meat here. And Spencer, give us the news. Dennis, tell you what you did, and I'll tell you what I almost did.
No,
nice tease. Beyond Meat catching a downgrade this morning from one of its underwriters. JP Morgan has downgraded Beyond Meat to neutral. They did raise their price target by $1, but the first big downgrade here to Beyond Meat.
They said something about, at some point in time, all the growth is going to be priced in, and that point is now. That wasn't a good. That's not good. That wasn't good for my long. Okay, continue. What did you almost do?
I almost bought the 150 put yesterday.
Oh, you're trying to fade us. Me and Jeremy were long.
I know. And it was trading at 168, 169. And for the put that expires on Friday, they wanted $6.
Craziness.
I know. And I'm
so here you get a downgrade even in your favor, and you're still not even in the money.
Oh, but it will move.
It's gonna move.
Yeah. Oh, Well, I mean, here's the thing, and maybe this is something we were debating last night about what you should talk about at the trading summit. I think, maybe that old option strategy, stock with the option strategy, because you mentioned it hit a good level this morning. Let me adjust the chart. Did it match the low from yesterday?
Real close. I don't know. I wasn't watching it. Just okay. So what I sold my Beyond Meat this morning on the JP Morgan downgrade. So I had a little bit left. I sold multiple times yesterday. So I kept a little bit overnight. Downgrade this morning. I was like, okay, I got to get out. That being said, I don't think it's over yet. I don't think the story is over yet. I think it's going to cool off here with the downgrade. Maybe cools off for a couple days. I know Jeremy Newsom over there, he was eyeing a little pullback to the 137 level where he might actually try to go long. I don't know if you're going to get it today, Jeremy, on that 137, if it's going to go that low, but Joel's got another level for you here.
Yeah, it's an easy level at that. I mean, I guess I'll have to wait for the day low, because I guess if you figure it from the pre-market low was quite a bit below yesterday's low, 143.66. So man, what was that? That was like a 40-point move, so 165. But I'm not really, when I do these retracements, I don't use the pre-market trading, just because 2 shares or 3 shares or 5 shares could trade there. So we'll see what that low is today. I have no idea where it's going to be. I can imagine 147.90 is where I would be bidding, because no, not 147.90. Let me look at the daily. The low from yesterday is 147 even. So that's my next target on the downside after that.
See what it does there. In the pre-market, it bounced right around there. So that's interesting. So still holding up. If it can hold at 147, then it becomes interesting. If it doesn't, maybe Jeremy's 137 level comes into play here. I don't know where he got that number from, but that's what he texted us last night, is where he was interested. So anyways, I'm out for now. Not going to fight the analyst, not going to fight the tape here this morning, but still on the watch list. I might get back in again, and who knows, I might even play the calls. I tried to buy the calls yesterday morning. There was no way, though. Even on the pullback, I was hoping. I tried to go get the 160s because I had to up it because the price was so high. So I tried to buy the 160s, and we started to pull off. We opened up yesterday at, where were we, like 155 or something. Then we had that little pullback in the first 10 minutes down to the 147 area. And I just wasn't quite. I was trying to pay $4 for the 160s, and they got down to about 5, so I didn't quite get there. And then we know we blasted off to 186. So I actually was going to sell all my stock if we got to 196, but we didn't quite get up there. So I ended up getting out of some in the 170s. I got out of some earlier, so just wiggling out. And then I sold the rest of it this morning at 155 on the downgrade.
Just mention that too, because you did have offers out there. Did you say 190? I thought you said 195 or
yeah, right in there. I had in my head that I thought I could. I said I think this could go 200. So I know it's going to go there. I still think it could potentially go to 200 here. I still don't think the story is over, but the JP Morgan downgrade definitely slows the party down here just a little bit. So I just it was going to blast off mode there, Joel, for a little bit. I went 160, 170, 180. So I had my order out there just in case it got really silly, and I was like, if it's anywhere near 200, I am going to sell this. But it didn't. It got up to like 184 yesterday, and then peeled back. But I was sitting out there at 194 just in case it really got silly.
That's good. I know that's good. I mean, have your orders.
The short-term top is in, obviously, JP Morgan, but I don't know if the story. I don't know if the all-time high is in here yet. I know it's peeled back. I'm out, but definitely still on my watch list.
I'm done predicting all-time highs.
It's hard. Hard to do.
I said that, when we were selling off last week, and boom, 5 interest rate cuts, a deal, a trade war, and deal with Mexico. And now I guess the main driver this morning is it's going to be really easy to get a deal done with China now, right? All of a sudden, is that what I'm reading in the tea leaves, Spencer? Like a deal with China?
Well, I would hold your breath until G20 in 2 weeks, because that's going to be. That's the big red circle on everyone's calendar. Is
or
G20.
not the Benzinga Trading Summit, June 20th?
Well, that too, but also G20 in, I think it's the 26th and 27th.
Okay.
Let's just talk the S&P. Brought it back to the macro picture. Let's talk the S&P. It's been an incredible 5 or 6 day rally. As ugly as May was, we completely turned around and redeemed ourselves in June, getting back all of May losses, basically the majority of the May losses, in 6 trading sessions. So my portfolio has come back significantly from those lows too. I mean, I have so many stocks in my long-term portfolio that I just basically move around with the market. So I complain when we fall 5%, and I'm one of those glass half empty guys, so I don't usually celebrate when we're up 5%. But I did do some celebrating there yesterday because I sold 2 stocks out of my long-term portfolio. The one big one I had, and it was a sizable position, was AIG. I've had AIG in my portfolio for years, and I bought it back shortly after the financial crisis. I rode this thing, and I think I was in from like 30 or 32 bucks. Obviously rode it all the way up to the $67 area, and then watched in the end of 2018 all of my profits pretty much go away, where the stock went from 55 down to 30. Where did we get down to in December? 37? Low 36. And like I said, I was in at 32, so I was pretty disappointed. So we've come back significantly, and we're bumping our head against a big resistance level at 55. You can see in 2018 so many times bump up against 55. I'm getting 53 and a half. You know what? Maybe you could stick around and get the 55, but good enough. Got, the majority of my gains, well, not the majority, but over half of my gains back that I had lost in December, and I'm out of AIG. All out.
Okay. All right.
Also sold my Hewlett Packard, but that was one I was just in for a bet, and I don't know. I just wasn't having the love with it. It hadn't been responding, and again, it's up at resistance too, is $20. So I haven't liked the way Hewlett Packard has been trading at all since I bought it, and since it's up here back at this resistance level, 20 to 20 and a half again, keeps fighting it up here. I'm all out of that one too.
All right. Well, selling in strength of the market. I mean, from a S&P futures perspective, not much in here. 2905.75 was the high for Monday. I think the only thing that keeps me from being super uber bullish here is you got rollover. You got rollover tomorrow, right? It's going to be the second Wednesday of the month, and we're going to have the triple quad witch, whatever you want to call it. And that's when you'd have the transition from the June to the SEP contract. And so, so the liquidity is a little bit split. Actually, the front month contract will be SPU on Thursday. So you do see some funky action, and you saw a sell-off yesterday, a sell-off into the close. You saw an 8 p.m. low in the SPUs last night, Dennis. Right. They made that low right on that bracket and been rallying all night. So keeping an eye on 05.
And we're still rallying. Trump, talking about a potential deal too. There was some commentary overnight just saying, yeah, he thinks he can get a deal done. So the market is riding on that too. But let's just, a little word of caution here. As the market goes stronger, Trump has more, Trump can play a little more tough guy here too. So I just think if you're coming in and buying stocks now, like here it is, it's a 5% rally in basically 5 days. I think you're doing it backwards. Like I said, I bought some Square during the sell-off, and this is long-term investing hat, not trading. So, but I bought some Square. I said I bought that bots ETF, and I bought a couple emerging markets ETF back right at the end of May. I'm already up significantly on all those things. And even the bots I bought at 19, it's 20 bucks. I bought the Square at 63, it's 71. And I bought the EEM equivalent at, I don't know, like 40, and it's already, 42 this morning. So, that's how I do. I'm a contrarian long-term investor and more of a momentum trader. So it's like almost exactly opposite. I try to take that Warren Buffett approach. Whitney Tilson was talking about the same approach too, buying when the stocks are weaker, buying on valuation. That's how I've tried to do investing. I feel like I'm a much better trader than I am an investor, and that's why I'm excited to actually go to the conference, to the Benzinga conference, where we're going to get some Whitney Tilsons, we're going to get some longer-term investors, and it could help me with my long-term investing as well too, because I think I do a pretty good job at it. But I don't know. Like I buy stocks, and you hold on to them, and sometimes you hold them too long, and it can always improve. So trading and investing is always a continuous improvement thing. So I'm hoping to learn some stuff there as well and get better with my long-term investing too.
We have someone from Sydney, Australia here in the chat. ROLS Timberland. Welcome from what time? It's already tomorrow there, right? Late tomorrow.
Oh, yeah, they got the future. They know the future.
What did the market do today?
They know the future.
Yeah. Boy, oh boy. Just so you get that Wall Street Journal one day early, right?
Be good. Remember Back to the Future? Part 2, when he got the sports game of the sports book? I brought it back, changed the whole world.
I remember that. Joel does not.
Joel doesn't watch enough movies. You
80s,
remember that, Mr. Israel?
80s is a blur for Joel. I don't think you remember.
He had long hair, swimming. He was partying in the 80s. I
Uh,
was a little kid watching Back to the Future.
okay. All right. So like no.
Bad tangents today. And if you can't tell, I have a little bit of a cold. I'm tired because it's my birthday.
Okay. Are you doing anything special? Like, do you get a birthday lunch or
I don't know.
dinner?
I don't know.
What
Maybe
do
we'll
you
have to find out. I haven't been told anything.
Two
I didn't even
friends-
know it was my birthday until late last night.
What do
So
you?
the boy gave me a little birthday card, so the boy remembered.
Do you want us to send you some Beyond Meat burgers?
Oh yes, this sounds excellent.
Over the border. Okay, we can do that.
Continue here. Let's go back to news. Did we talk to CVS? Did we talk it?
No, we didn't.
Okay, in the pre-market show we were talking it. Let's talk CVS because I don't know if I'm ever going to see this happen before, but they're going to try to nix this deal. The deal's already been done. The deal closed back in November. They've been trading as one company, CVS and Aetna, for the last 7 months. And now they're going to try to undo it, potentially. At least that's what the New York Post is saying.
Yeah, the New York Post saying that U.S. District Judge Richard Leon alerted lawyers that he is potentially making plans to nix the deal. The deal that has been approved and signed off on and already happened. He is going to go and, I guess, undo that deal now, or so he has indicated in a note or in a hearing last week that almost nobody noticed.
I don't think I've ever seen that before. A deal gets approved, they trade as one company, and now they're going to potentially undo the deal after the deal's already approved. So they would have to basically spin Aetna back off.
And it become a stock. I have no idea.
I've never seen that happen before. Maybe it has, but I've never seen it happen before where a merger gets approved, they go together, they're trading. Imagine being in the company. You're putting everything together. You're reworking people. You probably fired a few people. You probably hired a few people. You're moving these two companies together as one. There's a lot of work involved in that for the last 7 months. And now you might have to undo all that. That sounds like a mess.
So, all right, so listen to this from the New York Post. Judge Leon could be the first to reject a merger settlement since 1974 when the TuneIn Act was passed by Congress, giving judges the power to disapprove settlements. But apparently that has not happened.
Mess.
So.
Mess. That's all I'll say is mess.
Yeah.
Commentary.
The stock, I mean, it popped. I mean, what was that? 51, 73, 52. I would stay in the bullish camp in that. We're a ways away from that. You hit that in April. You hit 51.77. You revisited 52 even in April again. And then in May, you came down to 51.72. So that's where the big boys are buying. I don't think you're going to get down there today, but that's your major support. On the upside, I mean, let's see what happens at the close. We are trading in the red by 68 cents, a little bit action. I actually seem to be getting a little buying interest at 54. Is there anything in the book at 54, Dennis? 5 or 10,000 or?
I can go get the book, but I mean, this is all going to be headline driven here. Here, I'll look at the book for you real quickly. But I don't even know if anything matters when there's headlines like this going on. Like this story is, if this really does get rejected, it's far from over. Because you're right, like RCA is saying that CVS will appeal. Oh, for sure. And I would think they're going to sue. I mean, there's a lot of money that has been dropped in this. You approve the merger and now somebody's going to undo that. Like I would think there's lawsuits. This is going to be a mess if this actually does get undone for, not just for CVS, but, this could go in courts. This could be a long drawn out affair. So we are far from just seeing, oh yeah, CVS is just going to say, okay, yeah, we'll spin them back off. Because of all those things I just said, they've been working hard on this to get this deal done for like a year. Now the deal's been done and they've been working as one company for the last 7 months. Now it's going to get potentially undone. Story is far from over. It's going to be headline driven going forward from here. But, you see this in CVS, I'm not surprised it's trading down because it's not good news. There's no way to interpret this as good news for CVS, in my opinion.
Walgreens Boots Alliance, why they changed their symbol, I don't know, from WAG, but not a
That was the best one. WAG. I liked WAG.
What about Head and Shoulders bottom there? Just throwing that out there for you.
WBA. Kind of see it a little bit.
Left shoulder, right shoulder.
Or an ugly downtrend.
Exactly.
Still Amazon, ground zero for, Amazon attacking. I'm not interested.
All right.
Sold to you. I'm not interested. Actually, not sold to you. I'm just not trading it because I don't want to be short.
I'm just going to do this real quick because we got a lot of stocks in the chat. Someone asked about Mickey D's on a rebound. Man, it's all about 200 for Mickey D's. She hit that yesterday at 199.74. That match low at 200.03. So good to go north in that one. Someone also asked about AMD, made a new high of the
Unreal
move
AMD.
yesterday. 34.13 went to 34.30. So it's knocking on the door at 35 there. We got someone wanting to short Snap, and I know this is a strong market, but he's leaning on a triple top here. 1407, 1411.
Oh yeah, I see it.
13. Yep, I like that. He said he's out above 1420. So
you got to find out.
Yep.
I'm fine with that. I mean, I'm not saying I'm coming there and do it. We've seen these little consolidation periods and then they rip higher. Just don't miss your out. But you can put any trade on it. So you can put any trade on as long as you know where your out is. If your out's at those highs, 14.15, 14.20, then you know what your risk is. 13.90 this morning, you're risking 30 cents to take a look at the downside. I don't mind that trade.
Okay. All right. And let's move on, Spencer. We've been kind of jumping all over the place.
That's okay. It's a good day to jump around. There are a few other things on our list, but nothing that was super high priority.
I had Broadcom.
Oh, AVGO. I think, a
supplier deal.
A subsidiary had announced a deal with Apple, right? That's what it was.
So it's another supplier deal for Broadcom with Apple. AVGO did start rallying right on that headline. It's up 3% here this morning, so it's a good morning here for AVGO. And man, this is a stock that has rebounded substantially too. 6 days ago, it's 250. Now you're looking at 290. I mean, this is like a 12% rally in 6 days. Wow. Wicked sell-off end of May, wicked rally in June for pretty much everything.
Gap fill here. I just alert our traders, investors that you do have a gap fill at, where do we gap down from on this day? Boom, let me grab it. 288.41. Boy, that's tempting. That fills the gap that you had from May 17th. I'm not sure why it gapped down that day. So if you've been waiting for that, you're going to get your opportunity today. If you want more on that, more upside, you got a high at 293.57, and then you got to think about the psychological $300 level.
Yeah, and earnings by Apple's telling us AVGO earnings on Thursday.
Okay.
That is correct.
Casey earnings, if you want to do the one report that we do have, Casey General Stores is trading up $10. I don't trade the stock, but it's up $10, and it's actually a pretty big move for this stock, which typically doesn't move that much.
It was just knocking on the door here. If you look at the monthlies here and you were buying it, I guess it's not that clear there because you had the 122.86 low in March. Its pre-market high is 148. Not a lot of volume here. You backed off. Really the only number I could give you is that pre-market high. I believe this is a new all-time high. Where are these stores at? I don't think I've ever seen one. The all-time high, if you want to use support, old resistance is support 138.45. But I've never seen one.
I've never seen one either. Do we know?
I think they're
West Coast.
I think they're in the. There are some in Michigan. Apparently, I didn't realize that. I think they're in the Midwest.
I mean,
so are we. But I don't know. They're some by Chicago, Indiana, that area.
I've never been in a Casey's. So, anyways,
right.
definitely not in Canada. At least I've never seen one in Canada.
Yeah, so Casey beat, and they raised their dividend from 29 cents to 32 cents. And H&R Block, you're right, Joel, also had earnings this morning. They beat and also raised their dividend by a penny, 26 cents, and announced an acquisition. They're acquiring Wave Financial for $405 million in cash. So beat, dividend raised by a penny, acquisition.
We did have one other earnings stock. Jazz is saying HDS. They reported this morning here. They're down 6%. How'd they do?
HD Supply beat on the EPS, in line on the sales. The Q2 EPS guidance was light. The Q2 sales guidance was light. The fiscal year EPS guidance was I guess in line, sales guidance was okay, but
Not great.
right on the Q2 guidance for HD Supply. Go back to H&R Block.
Just H&R Block, my former employer. Well, I guess not really because they acquired Oldie Discount. Waking up here a little bit, up $1.56. Just going on the monthlies here. If you're looking for a target above your pre-market high comes in at 29 even. Just seems like if this could sniff $30 today, don't know if it will. 29.81. That was your high back in June, just about a 52-week high. So keep an eye on $30. And then HDS. Boy, are we testing the low of the move here? Trading down 253.
Taking out the low of the move. 41 is the low of the move.
That's not good. Got to
No.
get back above 41 for a chance.
No, that's not good.
Yep.
On the earnings guidance menu here, Creed did not have earnings, but they cut their guidance this morning. So CRE
Yikes.
cut their Q4 adjusted EPS guidance. The range was 12 to 16 cents. The new range is 8 to 12 cents. Estimate all the way up at 21 cents. So they cut the EPS guidance, cut the sales guidance as well from the $265 million range to $245 to $252 million. So cutting the Q4 EPS and sales guidance is CREE.
They hit it down to 55. They're having a little seller's remorse. It's already back up here at 57. I never like to buy stocks when the cut and guide, so it just doesn't sound like a good combination.
Not good. They got a pop and then a drop. Pre-market low is 54.98. But I think I would, with this bad news, if you want to hold out for the low of the move, that comes in at 53.36.
Anything else on your list, Dennis?
I had a few. Just jumping back over. Well, there's a lot of interesting ratings, but we got to talk AMD. I mean, the stock goes up $1 every single day. It did pull back yesterday and close weak. So that's one sign that a stock is getting tired. I mean, this has went from 28 to 34 in 6 days. This has been an incredible rally. We talked about the relative strength in AMD, how it held to 26. It was definitely holding up better. When all the other chips were getting wrecked, this thing would not go down, and there was reason for that. Now it's been going up. That being said, 34.30, I would say, is a line in the sand for me now, because it did peel $1 off that high. We're up here again this morning, but if you get up there, maybe you take a shot. You know, you get 34, maybe you take a shot on the short side, stop out above the high, though. So if we're setting up a trade for you, I'd say if I could get it, you know, in the 34 area short, just trying to say that potentially maybe, you know, it topped out yesterday, which kind of looks like because it peeled back from that. Again, though, if it goes above 34.30, I would cover.
And 34.15 was your high back in September. So relevance to that area as well.
I like that.
Yep. And then 15-year high Spinner is mentioning, and 38.25, August of 2000. That's what high.
It's crazy that we're back. This is a stock that I, you know, back when it was $2 a share, I think a majority of people thought would never, ever have a chance to ever get back to 40. And we're going to talk about, what's the all-time high, 42?
The all-time, no, it's above that. And I know what it's going to be. It's going to be March of 2000. No, this is a little bit later, June of 2000, 48.50.
48.50, got to.
Yep.
It's back. It's right now the most favored chip stock out there. So on significant pullbacks, that ever gets back to the 30 area, it's probably a buy here again. So, you know, I set up a little day trade for you on the short side, but I'm still thinking long-term trend is your friend here. So looking for pullbacks here, gets back near 30, probably a buy again.
If anybody knows the president of that, CEO of that company, could you please find out if she ever worked on the floor of the Chicago Board of Trade? Because I knew Elisa Sue that was my pit clerk on the Board of Trade. And
I don't think that was her.
You don't think? It looks like her.
No.
And she went to MIT. MIT, and that's where Dr. Sue went. So
we'll get her on the show.
I've tried.
Use your hookup here.
I tried. I haven't been able to get whatever. But anyways, great looking stock, great relative strength at 26. We'll see what happens at 34.30.
Let's talk CRM. It's bouncing back a little bit here this morning. Obviously got hit on the data acquisition there yesterday. Maybe a little overdone. It got down to $150.83. It's a stock that is still loved. So does it stay down? Because they did pay a significant premium for DATA. Do you think it stays down here? Or is this something you'd look at if it got back down to retest yesterday's low? Would you look at this from the long side?
Kind of in the middle of no man's land here.
Tricky.
Yeah. I mean, if I was short yesterday, I'd be looking at yesterday's low. That came in at 150.83. So people that sold in the hole are going to be looking for that. Nice gap fill too. Boy, oh boy. I wonder if, I know Jeremy likes to trade the gaps, but I wonder, or fade the gaps, but this one was a real nice gap fill. You had a high of 150.92 on June 4th, and it made a low of 150.83. And then rebounded. So big volume yesterday. Another stock that I just wanted to mention real quick, and it's kind of like an old rule that has been broken a lot about when a stock does a takeover. But man, oh man, UTX, they had that thing trading in the green on the open. It's going to be a great thing. Found resistance just below your May 22nd, May 23rd highs. And as you would say, Dennis, kaplooey. They really took the wind out of that thing. So
they had them both down. Both finished red on the day.
Yeah.
So it's not often you see a merger and both stocks finish in the red, but you're right. They pulled the rug out from under this and went straight down really ever since the open. UTX opened up near the highs, 135, 134, 133, 132, 131. Within 10 minutes, it had given back the majority of its gains. RTN was trading a little bit higher than that, but it gave back the majority of its gains too. I don't know if it actually closed in the red RTN, but it was darn close. Both stocks giving it all back. There was no sympathy trades to be had. I tried CAE, but because the two, even the two in the merger weren't even going up that much, it was probably a tell. But did you see even going back? There was a lot of stocks. Twilio ended up giving it all back and closing red. So, and it was the one I played off sympathy, and I made 4 points off the sympathy trade in the pre-market. I guess sometimes it's good to book those profits because if I would have held on to it, I'd given it all back.
Yeah, no, it's the sympathy. I mean, it lasts. There's a deal going on, and boom. I mean, take your profits quickly. Got up to 148.30, and you're right, did close in the red. Bouncing a little bit today. I think 144 is my level in interest because that surrounds your last two closes, 144.11, 143.62.
So we got some quiet periods ending here today. Let's go to ratings for a few minutes because there is a ton of ratings here this morning. Some significant ones. Like I said, there is a few quiet periods ending here too. Spencer, Israel, give us some highlights.
Well, before we do that, I wanted to ask you if you were trading Shutterfly yesterday at 345 or 350.
No.
No? Oh, you missed all that action?
Yeah, no, I didn't. And yes, I did. And it was because we remember we were on the show yesterday and we were talking and they gave the price and they said it could be for around 2 billion. And we were looking, I was like, well, it's trading for like 1.9 billion. So we were like doing the math. I remember on the pre-market show when it was up at like 52 or 53 bucks and we were like head scratcher. I was like, well, it doesn't sound like it's gonna be much premium. It wasn't much at all. It got taken out of 51. So the people who were speculating really didn't make anything.
That's tough. I mean, they did it. I don't know what they're planning on doing with it. And, the company sells here too. So after hitting that all-time high and now selling out near, after a 2-for-1 stock split, I don't know about that. I don't know what, maybe we'll get someone from Elliott Capital is the one that did it.
Apollo.
Yeah.
I mean, they know what they're doing. So I don't know. It just it didn't seem like a lot of juice.
So officially announced after hours, $51.
Okay. All right. S&P's boom right through yesterday's high, 0575. Yep. Rally here.
Yeah. All right. Imbalances are just before we got 1 minute here for the gas. GE 266,000 to sell. That's there every single day for years. I feel like now. Morgan Stanley 42,000 to buy. CRM 112,000 to buy. So that is significant for CRM. It's also trading up $1.81 now. That's about it. I don't see much else.
All right, we'll go back to the ratings and the analyst quiet period expirations after we bring on today's guest. Ivan Feinseth is our partner and CIO at Tigress Financial Partners, and will he be at the summit? I can't remember.
He is going to try and stop by.
Okay, all right, potentially. Yep. Well, in any case, let's grab Ivan. So we'll be right back in a moment here with Mr. Feinseth. All right, welcome back, everyone. We are joined now by Ivan Feinseth, partner and CIO at Tigress Financial Partners. Ivan, how's it going today?
Very good. And yourself?
Doing well, doing well. So, Ivan, tell me why I shouldn't just bury my head in the sand until G20 at the end of the month and not listen to any trade headlines until then.
Well, no, I believe you should do that.
Oh, okay, great.
That would be a good idea. But look, Trump, I think his ultimate goal is to fight tariffs with tariffs. He would like to totally eliminate tariffs. And, his methods are a little crazy, but he continues to push the tariff issues and believes that, the U.S. has the upper hand in many cases because we're a net importer from many countries. So therefore, the tariffs on the imports, significantly more imports than we export, puts us in a position of strength. And his goal is to open up China markets to U.S. companies and reduce some of the barriers to doing business there. And he just keeps pushing the envelope. And I think that earlier this year, the strong GDP data we had and the strong unemployment data that we had in April gave him a license to be a little more bold and push the issue. And we had, unfortunately, the sell-off in May, but Trump likes to be judged by the stock market. So I didn't think he would let it sell off too much before he backed off and let the market start to rally again, which is what we're seeing here. In theory, we do have the upper hand on another issue because the reaction in our market is a lot less than the reaction in the Chinese stock market. Every time he's pushed the trade issue, our market has sold off, but the Chinese market has sold off a lot more, putting more pressure on Chinese President Tsai to make a deal, which is what Trump keeps saying, that they need to make a deal. He doesn't need to make a deal.
Well, speaking of that sell-off, looking at the chart, it looks pretty V bottomy-ish. So is that, as far as the market's concerned, are you seeing that as well, or are we?
I think
is the bottom of this move in? It looks very similar, near identical to what we saw the end of last year.
Yes, and the V, the strong snapbacks indicate to me the market wants to go higher rather than lower. And I also think that, unfortunately, President Trump, caused the sell-off in December on a number of levels. He put a lot of pressure on Fed Chair Powell not to raise rates, and then gave him no choice but to raise rates in December, which probably that one last quarter of a point last year was not necessary. But if Powell didn't raise that one quarter more in December, it would have looked like he was succumbing to Trump's pressure and not be independent. So it was actually, in my view, Trump that pushed the issue. If Trump did not, because it is funny that in theory he hires Powell and then wants to fire Powell. But of course he blamed Mnuchin. He said, Mnuchin told me to hire him. But I think now, though, the Fed is definitely on the side of the bulls. They are leaning toward cutting rates, maybe at least taking back that one rate increase that they did at the end of last year. So you have the trade, some type of trade deal as a catalyst that could lift the market higher, and the fact that the Fed is definitely accommodative, leaning toward cutting rates, which puts them definitely on the side of the bulls.
All right, so you say the market wants to go higher. We have this horrible jobs number, but I guess it doesn't matter.
Well, no, not horrible. Good news is bad news there. Bad news is good news, because the job number, I think, was kind of trade uncertainty related. But the market rallied on Friday after the bad jobs number because it increases the probability that the Fed could cut rates, maybe even in July. I think definitely by September.
And you think that that's the direction to go? Just to do a rate cut here at the first sign of weakness. I kind of always looked at QE as as something when the market was really in the dumper, or really a financial crisis. What if they go ahead and do that and then nothing responds? Is that going to be the panacea for the market at this point? Why not wait it out a little bit? Everyone is factoring it in. I know the Fed fund rates are there, but man, it seems a little premature to me.
Well, the fact that, the Fed funds rate is right now with 225 to 250, gives the Fed a whole lot more room than 2 years ago when it was still,
Sure.
almost zero. So they have room, significant room to cut and raise. And to me, I would much rather have a proactive Fed that is willing to become more accommodative. And by the way, there's other ways the Fed increases liquidity into the market between reserve requirements and lowering rates they pay on excess reserves that also do the same thing. I mean, there's a number of things like, open market operations, either buying securities or selling securities to do the same thing that the Fed funds can do, especially when you start to see the bonds, different maturity bonds trade either below or above the Fed funds rate. And, what's usually on shorter term bonds, you see it, but for the 10-year to be below the lower band of the Fed funds rate is indicating that the Fed funds rate is going to come down. So I'd rather have them be proactive. I'd rather the first sign of an issue. And the other key thing is that even the most hawkish Fed member's goal is to focus on eliminating or controlling inflation. And, inflation has been non-existent. I mean, I say the reason we have low inflation is two words, Amazon and Walmart. They have done an incredible job of creating an incredibly efficient supply chain for consumer products and keeping costs down.
So, Ivan, is there any area of the market that you are looking for weakness here?
I mean, weakness? I'm just not a fan of, consumer staples. There has been no growth there. And again, the reason because, Amazon and Walmart keep the cost of many consumer products down, but I think there's huge opportunity. I think Boeing is a huge opportunity here. This situation with the control system for the 737 MAX is going to be resolved relatively soon. And I think the sell-off from 450 down to 350 is a huge buying opportunity because Boeing has a 20-year backlog of planes. And unfortunately, if you decide you don't want a Boeing plane, you have no choice. The airline industry is capacity constrained. They need more planes. They can only get the planes as fast as Boeing can make them. And, you have to order years in advance, and they're planning out their routes and their capacity years from now based on planes that they're buying today that they will get years from now. So I think the sell-off in Boeing has been a huge opportunity.
What about the financials here? Getting a nice pop this morning with the market. Overall, not really keeping up on the rally here. So how are these, major money center banks with lower interest rates? How are they going to muster a rally? People are going to buy just for the dividend, which is attractive on some of them. Give us your take on the financials.
I'm not really an overall fan. I don't focus on financials,
Sure.
But my two favorite are Goldman Sachs and Citibank. I think Citi has a great banking franchise that they continue to lever. They've, really improved operations at the bank, and there's a lot of opportunity in lending and in financing, and also participating in equity and debt underwriting, and of course, Goldman Sachs, because we have a huge amount of pent-up demand for equity offerings, including all these unicorns that are planning to come to market, throughout this year. And I think those are my two favorite financials.
And Garmin, I know that's a favorite of the years. Got hit after after its last report. Nice rounding bottom here. Double bottom on the monthly charts. Let's see just where we at here at 76. Still bullish on Garmin.
Absolutely. They made an announcement last week. They have a special relationship with Blue Cross Blue Shield to build out their corporate health and wellness platform for them, as well as giving members access to the Garmin wearables. Members can have a discount on Garmin wearables, and their focus in healthcare. And so much of healthcare and health monitoring is going to be focused on wearable technology, of which they are emerging as the leader of. Plus, they got a OEM win to supply infotainment systems to BMW. They are one of the leaders and such, a brilliant company in incorporating GPS technology in cars, and that's going to be, I think, another growth area. I think we'll see more OEM wins there. They recently bought a indoor fitness company called Tax, which makes exercise bikes and bike fitness trainers as well as treadmills. And I think they could be a serious contender to the very popular Peloton. So they have so many things they do well and so many levers to drive growth. And I think that, unfortunately, the quarter, I didn't think it was that disappointing. I think the market did overreact, creating a buying opportunity. And I think the stock will come back and make new highs shortly.
And Ivan, before I let you go, we're going to be out in New York City a week from Thursday for the Train Summit. I remember you saying you had a busy agenda that day, but I certainly hope you can come by.
I do want to try to stop by. I would love to see it. It sounds like a very exciting event.
Yeah, thank you.
All right. Hopefully we'll see you there, Ivan. Ivan Feinseth is partner and CIO at Tigress Financial Partners. Ivan, as always, thanks for the time.
Thank you.
All right.
FDX here, getting off the mat. Once again, I may be seeing things here, but a potential head and shoulders bottom here, a little left shoulder, a little right shoulder. What are you looking at? I guess to be a little bit more comfortable in this one, you would need, boy, the dailies. This thing really moves around. You got a big open area here between 162 and 167, and you're trying to sneak into that area now. So on a short-term basis, trying to get, well, I see 164 high from yesterday. Couple resistance level, 164 and 167. I just think overall, you're fighting a pretty nasty trend there. Triple D, we're just chopping around a little bit, 29.08. That is our pre-market high. Absolutely nothing at that level for me. What are you seeing in the stocks?
You're seeing financials catch a little bit of a bid here this morning. The TLT is trading down. So again, you're probably going to see banks a little bit relatively stronger. Utilities are trading flat, or actually they're trading down a little bit here and now. It's risk on market here right now. So, even the last few days, you're starting to see some weakness in some of the defensive stuff like the utilities here. So I don't know if it's going to continue. I mean, it's going to be dependent on headlines with China going forward here to get, I think the easy money has been made in the long side. That's why I was lightening up my long-term portfolio as well. But, the trend is still, the immediate trend in the last 5-6 days is still your friend. I just feel like this rally is getting long in the tooth here, at least, because everybody wanted the hell out in May, and it's basically gotten majority of the losses back here in June. I feel like if you were nervous in May, now is your chance to lighten up.
Where are you buying Beyond Meat here? Down $22.50 here.
Jeremy Newsom's level, maybe 137. I don't know. I'll let the dust settle a little bit here now. This JP Morgan downgrade is running in the parade. Like I said, I was long coming in a little bit, so I sold it, I think 156. I'd have to go look at my tape, but and I could have got like 160, 161, and I held on, and then I sold 156. Obviously, glad I did that. It's 146 here now. The question is this story over? To JP Morgan top it? I mean, I think the 186, it's 40 points off of that now. So obviously that looks like the short-term top right now, but can this start to turn around and get momentum again? I think it probably takes a few days to get its mojo back. So I want to see some consolidation, maybe, try to find a low somewhere as opposed to just trying to call in and say, okay, yeah, I think it's going to turn now. So give me something to trade off of. It's hard to just jump in this thing now.
You want to see a super interesting chart?
Yeah.
WWE. Oh my gosh.
Stock is just, whoa. I was going to say that stock has been hot, but not in the last couple of months. Ugly.
Yeah, 10045. Your April 24th high, if you're using triple digits as your barometer. You hit that 2 days in a row, but never closed above it. Whew. I don't know, man. You hit a low at 71.09. This was back.
No relative strength.
Yeah, nothing. I don't know. Whew, this could be like a trap door.
Yeah, this ugly candle here, and people. I mean, if you were going long, you got to use that low. That 71.09 you're just talking about. 71.39 low yesterday. Low of the move 71.09. Below that, I want no part of it.
Yeah, I did not realize. What do you think? Was there any?
Yeah, they had a really bad quarter. One
of those, like the 3M trick. We'll have the bad quarter, and then we'll fade forever.
Yeah,
finally starting to show some life.
There it is. Boy, why am I seeing so many head and shoulders bottoms in these terrible looking stocks? Like, I don't know. Am I mistaken a little?
It's a little bit of a V. It's a sloppy head and shoulders, but
Not enough of yeah.
I don't know. I'm not a big pattern trader. Never have been. I just am a trend trader. I support resistance and trends. Like I said, when I used to do when I lecture, whether at college or university or to other traders and stuff, my technical analysis lecture is about 5 minutes. The entire thing. Support, resistance, and trends. Take your purple crayon, Jeff Mackey style, draw that, and trade off that. And that's the only technical analysis that I use. Like we said, we look at the 50% sometimes, the fib number, but for the most part, we keep it pretty simple. I know we do look at little double bottoms and double tops and little things like that, but for the most part, you too, Joel, you're support, resistance, and trends.
All the way. Multiple closes, consolidations for sure. Yep. Keep it simple, stupid. I just wanted to cover pot real quick. Everyone got excited with Tilray yesterday. Oh boy, they're not going to sell for 2 years here.
Yeah.
And it got a pop and a drop, but I mean, still ended up having a good day. But I don't think that was like the good news. There's got some overhead supply in that. Cron is showing a little bit of Cron. You got to thank Bank of America on that one, right? What day did you get the Bank of America upgrade? Was that like 2 or 3 days ago in Cron? So that
I'm looking.
Well, I'll tell you, these analysts have been having some influence lately, Triple D.
They do. I mean, look at Beyond Meat. The analysts, I love them or hate them, they are influential. And, that's the reason I saw the BYND. I was like, it's going to spook. It's going to spook some people. It's going to spook some longs here this morning. And that's why, you've got to, if you're long it, ring the register. That's what I did yesterday. I was in from the one. Where did I buy that? I can't even remember. 137. So, and I ended up selling. So it worked out. The trade worked out. But, I rang the register at 156. The rest of it on 156 this morning because I'm not going to fight the analyst today. This could cool it off for a few days.
Yep.
Maybe not. If it comes right back, I'll get interested again. But, guilty until proven innocent here right now.
Another thing too, you got to contend with here are the shorts. I mean, someone said 50% short interest yesterday. I don't know if that's correct, so don't quote me.
I think it is.
Yeah.
But there's still that's why I don't think the story is over. And I think if you're short, this is like JP Morgan just gave you a gift to try to, get covered here. And, if you can hold, I like I've said, I'm not a put this in your long-term portfolio, you're going to be okay. I think there's more of a squeeze still. I don't think we're done squeezing yet. I think in the long run, Beyond Meat is not $100 stock. I think it's and it's below $100. So I think 6 months from now, I could, say like Whitney Tilson was talking. I think 6 months from now, Beyond Meat's probably under $100, significantly under $100. I don't know the path to get there though. And I think the path could still be higher. And I think, yes, evaluation doesn't make any sense. I don't think these burgers are changing the world. I thought the burger was okay. I didn't think it was fabulous. I mean, there's wild cards. Could they get a big contract from potential like a McDonald's or something? Yeah, that would change a lot of things too if that happened. I mean, they kind of hinted a little bit on the conference call about the potential for, a big contract to come. So, if that happened, that would really take it off too. But I think there's still some squeezing to do before this thing gets back under $100. So I think I'm not confident to say that the top is in.
The dogs are not that good. Have you tried the dogs yet, or sausages? Have you tried them yet, Spencer?
You barbecued them?
Yeah, and be careful, man. Those peas cook real quickly. So you just
not like a normal dog.
Oh man,
burn it quick.
I mean, I like my dogs burnt, on the grill, nice and crispy on the outside. But I tell you, I went out there and they were smoking. So
Joel's burning the house down.
Just a little bit of,
Beyond Meat.
I'm no Kenny Palcari giving out a recipe every day, but that's my advice on that one.
If I was short Beyond Meat, I'd be covering in here. That's what I would say. Because I think there's more squeezing to do. That's my opinion, just my opinion. I got it right yesterday. I obviously didn't quite get out good enough on my long, but it's hard to get the top and obviously significantly off it. But I mean, I feel like there's still some more squeezing to do here. I don't think the story's over. What do you think? This is that? It's going to still again JP Morgan on a downgrade put in the top? I don't know.
Well, I guess
I gotta wait for today. I gotta see what happens.
Big day for it. Big day. If it shrugs it off ends up coming back and closing green or something,
It
look
won't
out.
close green, Dennis. I'll tell you that right
I'm not, these are
But-
hypothetical situations. Don't put words in my mouth. Like people, and this is one thing, when you're listening to the show, you can't just take a quote out of context, because people do this and they do it to the media. They do it to everybody. They'll say, if it closes green, and somebody will write, oh, I think it's closing green. Oh, I'm giving you a hypothetical scenario. If for whatever reason they shrug this off and this thing closes green today, 200 is in the cards, in my opinion. If they keep continuing to hit it, maybe the top is in. I completely agree with you, Joel. This is a very important day. How does it do in the face of bad news? It's down 11% right now. It's not doing good in the pre-market, but we know this thing's going to trade some crazy volume. Do the shorts start to scramble and start to come in, and start to do some covering? There's 50% short interest in this thing. I personally think there's still some more squeezing to do.
I think JP Morgan's notable. I believe they're the only firm that had an overweight on Beyond Meat. So they're now down to neutral, but it'll be the real test will be, I think, if another firm.
They're the only firm that has a buy on it?
No, well, not anymore. They don't. But
there's no firm that has a buy on Beyond Meat?
Bernstein. I'm sorry. Bernstein does.
That's crazy. So they all came out neutral?
So yeah,
well, after the quiet period, did they all come out neutral? I can't see that being right.
Yes. They all came out.
Generators were all neutral.
Bank of America neutral, William Blair neutral, Credit Suisse neutral, Jefferies neutral, Goldman Sachs neutral.
Holy.
So my point is, if
people got all wrong,
if one of them comes out and downgrades,
Sure, I was just
downgrades to sell, oh boy.
Or they defend.
What if they come on upgrade to buy?
I know. That's what I was just thinking too. This is going to be a tricky period. There's going to be a little analyst fighting here. I'm not in it, so now it's going to be hard. Selling it down $20. I will say.
I do believe it ends badly, though. Do you believe it ends badly?
I mean, badly for whom?
Longs. 6 months from now, I've said it 5 times in the last 3 days. 6 months from now, it's under $100. I'm calling it.
Okay.
But I was long it. I'm saying that, and I was long it because I think there's more squeezing to do.
Do that.
I want to buy it again. I think there's more squeezing to do. So trading is
nonprofits
for investing, not Beyond Meat.
Real quick, Jeremy, when we were going back and forth yesterday, I tried to get him to go 160 when it was trading at 167. I tried to get him to take 197 versus 137, and I gave it to him fill or kill, and he killed it. He went and take that for a lunch bet. Jeremy, if you're listening,
Jeremy out?
I think he might have gotten out even before yesterday. I don't know if he got it or not. 2 stocks to look at that look interesting here. Qualcomm. Rounding bottom here after the bad news. Also a gap fill here you had from the big day. I mean,
lots of overhead supply here. People like me looking to get their money back.
Yep, I agree on that one. So if your best case, I won't say best case scenario, but if you're looking for a target here off the slope, gap fill at 77.22. That's not too far away here. Of course, you got to worry and think about the lawsuits and everything. And then someone was asking about Lyft here, LYFT. Give us the news, Spencer.
Lyft had an upgrade. I looked at it like an hour ago, so I don't remember exactly who it was, but I can look again. Lyft upgraded by Susquehanna to positive today.
30,000 shares sitting there perched in the pre-market. That order is active and live right now. So somebody's trying to get out of 59. It was looking a little bit broken there yesterday. Does this turn around and give it some life? Maybe. Let's see if we can get back up over 60.
Don't like the red candle yesterday. And
no, it wasn't a pretty candle.
Nope. And until let's see, major super extra major resistance is at 63. Let's call it 63.21. That splits a pair of highs from the 5th and 6th. But I mean, you haven't taken out yesterday's high. You had it 60.58. So you want 30,000. I mean, that's a piece there, huh? It's not moving, right? It's just
that's live. That's a live order.
That's a live.
Edge sitting there on edge. 30,000 shares. That's big. That's big size.
That is. That's huge. Okay, Spencer.
All right. Oh, wait, real quick. Back to the stocks whose quiet periods are out today for the analysts. I think the main one that I'm seeing here this morning, as I lose it again. Hold on one second.
Fastly was one.
Fastly and AVTR, Aventor is the other one. And I'm not sure on Luckin Coffee, their recent IPO. They have 2 ratings today as well. Initiation to overweight at KeyBank and Morgan Stanley out at equal weight on LK. That's it for today's show. We are 9 days, like I mentioned, from the Benzinga Trading Summit, June 20th at the Sheraton Times Square in New York City. Joel, Dennis, myself will be there. Jeremy Newsome, Anne-Marie Band, Tim Seymour, Whitney Tilson. I can't even name all of them right now. Go to bzprofit.com to see for yourself who will be there. Enter the promo code PMP50 to get you 50% off to either general admission or to the exclusive trading lounge, where we're going to be trading and expounding on strategies. Trading floor, excuse me. We'll be expounding on strategies at length in that room. Any questions, comments, concerns, email us premarket@benzinga.com. That's it for today's show. Good luck today to the U.S. women's national team. Good luck to all you traders out there, and we will see you.
How about, should I teach hand signals? Like if there's going to be a trading floor, should I teach people how to do the arbitrage?
Sure.
Yes.
All right, we'll do that. And have a good day, everyone. We'll see you on